Hello and welcome to Car Dealer Live. I'm James Baggott, I'm the founder of Car Dealer magazine, and today we're talking used cars and used car prices with Derren Martin, who's the head of valuations for Cap HPI. Derren, thank you for joining us. How are you?
I'm well, thanks. Pleasure to be joining you again.
Nice to see you once again. Derren, what a turbulent start to the year once again. Here we are back in lockdown. The first question is, and it's the question you're probably getting asked every single minute of the day, what's going to happen to used car prices in this lockdown?
We've been discussing this a lot, as I'm sure you'd imagine. We're looking for patterns already in what's happening with the data. I think, as one of my colleagues said, there's a reason why they're calling it unprecedented. It is really, really hard to call at the moment. Values so far in January have barely moved, fairly steady. Volumes are okay. So I think it's I don't think there will be big drops at the moment. I think volumes will of sales to consumers will be probably about half of where they would normally be. I don't think there's too many people replenishing their stocks at the moment. You've got buyers on furlough and those sorts of things. So I think we will have probably a small drop during the next few weeks. It really depends how long the lockdown continues for, what happens during February. I would expect probably more of the same in February, probably slightly weaker than we would have expected it to be without lockdown, but certainly not through the floor.
So that's the second time in a week that I've heard that around 50% of sales volumes is what dealers can expect. Auto Traders COO Catherine Fairs told us the same thing last week. Where are you getting that feeling from? Is that from the people that you're talking to, or is that a gut feeling?
No, it's not gut feeling. I listened to Catherine and I thought she was spot on with that. When I saw the headline, I thought, oh, well, they're on the same page as us. We speak to a lot of retailers. There are some that I've got pretty much everyone furloughed and they're doing very, very low levels of business. But overall, most of the big ones are doing about 50%, some 40, some 60. But it's generally that's the sort of figure that they're at, and that's what kind of normal or of where they were last year. So they're tracking those figures. So knowing that I was going to be on this call today, my team of editors have made a lot of calls this morning, and that's the general feedback, that it's around that level still, yeah.
And let's cast our minds back to last year. With the first lockdown, we had around 20-25% of volume moving compared to normal levels. Prices didn't move. I mean, I remember us having a number of chats during that time, and you were saying that used car prices simply weren't moving at all because there wasn't the volume to move them. So what you're saying this time round is that there probably will be. Do you think you are going to be adjusting values as we continue through this lockdown?
Yeah, so we've been adjusting them already at very, very small amounts so far. We've actually seen a little bit of strength in some older cars again, which is an interesting early sign. Yeah, we're confident there'll be enough volume this time round. The situation in the March-April lockdown one was that dealers were getting themselves geared up for click and collect, but they weren't very well set up for it. The auctions were getting themselves geared up to be online. Certainly not all of them could do that. It's now the norm, they can do that. I think one of the concerns, and we were discussing this today, was if click and collect got stopped, that could grind things to a halt. We still think we'll have enough volume to cater for that, as long as there are cars selling through BCA, Mannheim, Aston Barclay, all the other auctions. We need to be reflecting that. We do get data from other sources as well. We've got about 50 odd sources of data from manufacturers to rental companies to leasing companies. As long as they're selling cars, we will be reflecting what they're selling for. So we don't think there will be an issue with data. We don't envisage not moving values at all unless they don't need to be moved. But we think we'll have the data to do it. We're confident with that. It's a different situation now. It feels like a bit of a hybrid between lockdown 1 and lockdown 2, really, this one.
Yeah, definitely. I mean, what about those dealers that your team have been talking to? What's the sentiment out there? I'm hearing a slightly different picture from different people. I mean, some are saying that it doesn't feel right to sell cars at the moment. There are others that are continuing as best as they can with click and collect, and there's others that are furloughing lots of staff and kind of hunkering down for the reopening. What are you hearing from the dealers out there, and how many do you think are continuing to do business as normal or as best as normal as they can?
I think most of them are trying to do some sort of business. I'm not aware of any that have completely closed. Yeah, there are a lot that have been furloughed. I think the mood out there is probably a little bit downbeat. Obviously, January is a real bumper time for them. It's probably one of their strongest months of the year, January and then into February. So there's a little bit disappointed, even though levels are around that 50%. There's definitely been more furloughing in lockdown 3 than in lockdown 2. A lot of that is buyers, so they're not going out and replenishing stocks, which volumes at the auctions are about half. They were about half last week of where they were, where sort of they would normally expect them to be. So it has cut back, but I think everyone is trying to stay open to a degree. I think obviously we don't visit these places, but they're all confident that they are safe environments. We used to do the visits to them. We can't now, unfortunately, but we feel that they're safe. They feel they're safe. And as long as they're acting in that environment, then they should continue to do so, really, and continue selling, keep the industry going, really, keep the economy going to a certain extent.
Yeah, absolutely. And when we got out of that first lockdown, there was this big problem, wasn't there? People couldn't get hold of the cars. I mean, a lot of those buyers, as you said, are furloughed again. I mean, are some of these dealers making a mistake by furloughing those staff? Should now really be the time that they're stocking up?
They know their balance books better than I do. I'm not going to tell them whether they should or shouldn't be furloughing. I think it's a bit risky stocking up too much at the moment as well. They have already stocked up before this because the January sales for them sort of start on Boxing Day. People looking online, I know there was that jump again from their used car sites on Boxing Day. People looking, I think I would sort of say less people are going to be booking holidays. You know, you go and you start looking at holidays after Christmas, looking at cars. I think car demand will be there. And even if consumers aren't going out and actually buying at the moment, they're looking, and there could be a bit of pent-up demand after this lockdown for those cars. So I think it's probably prudent to furlough people at the moment because you don't want to be going out and filling your up with stock. We don't know how long this lockdown is going to last for this time. That's the big difference between this and lockdown 2. That was pretty much a finite month. We knew Christmas was coming. We knew that it would probably be released at least at some point before Christmas. Whereas now, is it going to be a half term in February that gets talked about? Is it going to go into March? I think go out and buy stock that is nice stock. You know that you can move it. There are shortages of sort of some reasonable cars out there, but the more volumey stuff, I probably wouldn't be going out and stocking up too much on those.
Yeah, I read in the papers yesterday that they think this could go on till the start of the first lockdown last year, was March the 23rd. I mean, if it goes on that long, I think there's going to be a lot of us going stir crazy by that point. I mean, just want to touch on that point of that boost at the end of this period when it does come. And I don't know about you, but I sort of get the feeling that there are a lot of people out there, as you said, not spending money on holidays, still got a bit more disposable income because they're not spending it in restaurants, probably searching for those used cars. We're clearly seeing that on Auto Trader. Catherine reported there's a lot of people still searching. Do you think people are simply putting off buying a used car now? And when this does end, there could be a massive bounce. Let's give some dealers some good news.
I think there will be there'll be some pent-up demand. Again, if you think about that, we're all saying that levels are at about 50% at the moment. Well, that means 50% of people that aren't buying and are probably still looking. Especially if it's a necessity purchase at the moment, you're going to go and do it. Others will probably be looking, might be being a little bit wary of click and collect. For either for safety reasons or you want to see the car, you want to test drive the car. So I think there will be some pent-up demand. I would temper that on the valuation side that there will also be pent-up supply. So logistics is up and running a lot better than it was in lockdown 1, but there are still remarketers that haven't brought all the cars back into the market. There are obviously lease extensions, there'll be Motability extensions that were made last year. There were extensions that were obviously made at the start of lockdown 1 that were for 12 months, possibly, or they've just never come back. So there will be some heavier supply levels coming back when that demand comes as well. So it could be a bit of a volatile period. It's very, very difficult to predict.
Because we finished 2020 with very strong used car prices, didn't we? Up quite considerably on 2019. Are you thinking that there's not going to be a big drop off in those valuations, and when it does come, it will be quite gradual?
Yeah, again, it's a difficult one to call. The values were up last year, but there was a dip away in Q4, and which meant that at the end of the year, values were only around 2% up on where they'd been at the end of 2019 overall. Obviously, there's different models in different areas there that were up by more than that. And sports sector was one that took me by surprise. That was actually up the highest. That was the highest sector for us, up about 5% over the year. And before lockdown one, so before we'd even heard of this pandemic, values were actually dropping on sports cars. So there was a real pickup in that aspirational purchase, really. So yeah, I think the fact that values did come down in the last quarter of last year could temper any big drops this year, but I do think we're in for some volatility, and those supply levels, not necessarily on late plate models, but on older 3 or 4 year old cars. You think about registrations from 3 or 4 years ago, they were quite high at that point. Those cars have been extended as well from last year. They're going to come back at some point. So we're predicting that when they come back this year, there could be some valuation drops, but it's never going to drop off a cliff as far as I'm concerned. It might drop, but it will drop fairly gradually, I would expect. But again, if you go into a full lockdown with no click and collect and everything grinds to a halt, then you've got concerns around the supply and demand then.
I mean, there is some talk out there at the moment that the government are looking to tighten these restrictions further. I mean, at the moment, it looks like it could be around exercising and mask wearing in supermarkets. Do you get a feeling among the people that you're talking to, the dealers, that there's some concern there that click and collect could be one of the things that they try and tighten up on?
It's been mentioned, yeah. There's some rumours, all sorts of rumours, isn't there? You're only going to be allowed to the supermarket once a week, and I was watching some of the government briefings today, and Chris Whitty saying that really they're not going to restrict it by more at the moment, but you've got to stick to what you're doing at the moment, and if you've got to adhere to the current restrictions. If that doesn't happen, then there could be stricter ones that are brought in, and it does feel as though they're dripping stuff in to there be tighter restrictions maybe at the weekend. Certainly from the dealers we've spoken to, they are concerned that click and collect could be something that gets stopped. I don't know how imminent it is. Obviously, we really hope that doesn't happen. And as I said earlier, if it's being done in a safe environment, there shouldn't really be a need to. But they are saying just every time you go and visit somebody or have contact with somebody, make sure it is essential. So if that's the case, they could be. But you could also argue that a car purchase is essential if you're a key worker or you've got to get to the shops or something like that to feed your family. It is an essential purchase.
Yeah, I did some stuff for the magazine, and exactly that is what I said. You know, actually, if you are a car owner, pretty much anything, well, there's going to be at least one thing that you do with that car that could be classed as essential, even if it is just going to the shops once a week. So yeah, let's hope that click and collect it isn't stopped. But finally, Derren, what would your advice be to dealers on used car pricing, the prices that they're setting? I mean, there probably will be some out there at the moment that are still open via click and collect and thinking actually by lowering prices, they can get more customers in. I mean, what would your advice be on the pricing front that dealers are considering at the moment?
I don't think that reducing prices will make much of an impact. They've got to make their own decisions on how they price their vehicles. We're not seeing a huge drop off in the trade data. We're not seeing a huge drop off in the retail data at the moment. So my advice would be to try and hold firm again, like we were saying throughout last year. Really, there's no reason to reduce prices because I don't think people are not buying because cars are too expensive. I think there's obviously lockdown. There's issues around that. There's the fact that they might want to test drive. They might want to go and see the vehicle first. They might just be being wary of click and collect and things like that. So I would be holding on price as much as they possibly can, unless they've got one they've been stuck with for a real long time that they know they need to get rid of. But overall, I would be saying, yeah, just hold firm for now, and let's kind of just sort of buckle down for the next few weeks and see where we stand at the end of all of this.
Derren, thank you for your time today. Please keep us posted on any major changes as and when they happen, and I'm sure we'll be talking again during this lockdown.
Will do. Thanks, James.
Good to see you. So thanks ever so much for Derren there from Cap HPI. For more car dealer lives like this one, log on to cardealermagazine.co.uk and click on the live tab at the top of the page. Thanks ever so much for joining me. I'll see you next time. Goodbye.